welcome back to the Forex Lounge Fundamental Extras. Today is Thursday, July 29, 2010. Welcome back one and all. Great that you could join us. Today, Bloomberg.com reports New Zealand Central Bank raised interest rates for a second straight month and signaled it plans to slow the pace of future increases, sending the nation's currency to its lowest level in a week. Quote, further removal of monetary policy stimulus is appropriate, Central Bank Governor Alan Bullard said in a statement in Wellington today, after boosting the official cash rate by a quarter percentage point to 3%. He continues, the pace and extent of further cash rate increases is likely to be more moderate than was projected in the June statement. Getting to the charts to see what this looks like, the blue line represents the historical interest rates in New Zealand set by the Reserve Bank of New Zealand, the RBNZ. The violet line represents a 12-month moving average of those historical rates. And we can see today, Reserve Bank of New Zealand raises rates for the second time in quite a while to 3% off of those very historic lows of 2.5% achieved earlier this year and late last year. Now, comparing the Reserve Bank of New Zealand interest rate history, again, that's the blue line, to the NZGI, that's New Zealand Gross Index, that's the equity market in New Zealand. Generally speaking, over time, during prosperous markets, during prosperous economies, when the Reserve Bank of New Zealand raises rates, the NZGI, the stock market, tends to move higher. However, during economic downturns, the Reserve Bank of New Zealand cuts rates as the NZGI also moves to the downside. So the recent rate hike today reflects a stronger or a strengthening economy, and therefore we may likely expect the NZGI, the stock market, to eventually continue to the upside. Compare also the RBNZ, that's the Reserve Bank of New Zealand interest rate history, again at 3%, that's the blue line, to the violet line, which is the Kiwi dollar currency pair. Now, of course, there are two currencies within a pair. However, generally speaking, during prosperous times, when the Reserve Bank of New Zealand raises rates, the New Zealand dollar tends to gain strength. During economic slowdowns, when the Reserve Bank of New Zealand cuts rates, we tend to see the Kiwi dollar move to the downside. So, generally speaking, over the long term, as the Reserve Bank of New Zealand raises rates, we could likely expect continued strength in the New Zealand dollar. We hope this has been helpful. If you have any questions, email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon, back inside the Forex Lounge.